Wall Street indices end lower after Federal Reserve left its policy interest rates unchanged for the first time since delivering its initial rate cuts in September. Dow falls nearly 140 points, S&P 500 and Nasdaq end lower while bond yields rise as Fed signals no hurry to resume rate cuts. Oil prices sip as our U.S. crude stockpiles rise more than expected than last week. Trump's tariff threat, sanction on Russian energy flows and economic growth concerns also add to uncertainty. Tata Motors Q3 earnings miss estimates. Profit falls 23% while margins contract 11.5%. Management maintains guidance for JLR while for Bajaj Finance profit grows 18%. Management guides for net profit growth of 22 to 23% for FY26. And in earnings today, L&T likely to report a revenue growth of over 15%. Also, watch out for numbers from Shree Cement, Dabur and Tata Consumers. The stampede at Mahakumbh in Prayagraj has claimed the lives of at least 30 people, while 60 have been injured. Uttar Pradesh Chief Minister has ordered a judicial probe into the incident and announces compensation of Rs 25 lakh each for the family of the people who lost their lives. Hello, good morning. You've tuned into CNBC TV 18 and you're watching Power Breakfast with me, Vinny Motiwala. A quick look at what the Asian markets are doing. The most of them are shut even today as well. Markets like Taiwan, South Korea, Hong Kong and China are closed for the Lunar New Year holidays that are going on there. But we do have a couple of markets which are open. That is the Australian index as well as the Japanese index Nikkei that is opened up in trade. And when you're looking at it, as of now, both of them are trading with some bit of a gain. Nikkei is trading with gains of almost 0.1%, while Australian index ASX 200 is holding on to gains of almost 0.5% in trade. Let's look at the Nifty implied open. A bit of a muted start is what is indicated. Very flat start right now, just 1 point up for the Nifty implied open. So let's keep an eye out on that because we're watching out for that important handover that is coming from the US markets. So not much of an excitement in terms of handover that's from the US market. And let's look at that because Wall Street ended Wednesday's trading session a bit lower, where we saw Dow actually closing with losses of 136 points, while the S&P 500 closed nearly 0.5% lower. Looking at the tech-heavy index Nasdaq, that also closed 100 points lower in trade in the red, while we had three major averages which ended the session lower after the Fed actually paused the interest rate cutting campaign. Now, CNBC's Steve Leisman is bringing us a report on Fed's decision to leave the rates unchanged. Let's go across to him. Okay, let's also, listen into the Federal Chair Jerome Powell talking about Fed's policy stance, progress on inflation and more.
We are looking at the data to guide us in what we should do. And, that's what we do. And right now, we feel like we're in a very good place. Policy is well positioned. The economy is in quite a good place, actually, as well. And what we do expect is to see further progress on inflation. And as I mentioned, as we see that, or if we were to see weakening in the labor market, that could foster, we could then be in a position of making further adjustments. But right now, we don't see that, and we see things as in a really good place for policy and for the economy. And so we feel like we don't need to be in a hurry to make any adjustments.
Okay, and responding to the questions on President Trump's demand to cut interest rates, Fed Chair Powell said that it is not appropriate for him to comment on President's remark, and he is not in touch with Trump. Let's listen in.
I'm not going to have any response or comment whatsoever on what the president said. It's not appropriate for me to do so. The public should be confident that we will continue to do our work as we always have, focusing on using our tools to achieve our goals and really keeping our heads down and doing our work, and that's how we best serve the public.
Okay, let's also listen into what David Zevos, chief market strategist at Jefferies, had to say on Fed's latest decision.
I thought there was a chance that Jay could have broke that tension today and maybe said something like we're looking at what deregulation means for inflation. We're looking at what the tariffs and immigration policies mean. We're kind of coming up with our own versions of it. But he really is playing it as low key as you possibly could. He just did not want to talk about anything related to the new administration. We're going to have to step up and start saying things sooner rather than later. And we're going to be watching these Trump tweets post FOMC meetings probably closer than we're going to be watching the SEP and the statement in the coming months.
Okay, let's go across to CNBC's Steve Leisman, who's bringing us a report on Fed's decision to leave rates unchanged.
The Federal Reserve maintaining the funds rate in the range of 4.25% to 4.5%. They did say that inflation remains elevated as it had last time, but they crossed out a line this time saying that inflation has made progress towards the 2% objective. Not 100% sure what that means. Perhaps we'll ask Powell about that. Is that hawkish or just getting rid of a tired old phrase? They say labor market conditions remain solid. They had said that they had eased, so they did an upgrade of the condition of the labor market, also noting that the unemployment rate has stabilized at a low level. The economy, as they said last time, is expanding at a solid pace. The committee is watching risk on both sides of its dual mandate. The statement says the committee is still considering the extent and timing of additional adjustments. No hint as to when that might happen or by how much, and no change to the balance sheet reduction plan. They'll keep reducing the balance sheet as they have been. As the statement has said in the past, it says they're prepared to adjust policy as appropriate if risks emerge. And we have a unanimous decision with new voters for the new year. January 2025 is when they turn over. We have Schmidt from Kansas City, Collins from Boston, Musalem from Kansas City, and Goolsbee from Chicago. So a bit of a Midwest contingent voting this time, sans Minneapolis.
Okay, on that note, we're going to step into a very short break, but we'll tell you about how these overnight cues will impact the Indian market after the break, so stay tuned in. Welcome back and thanks for staying tuned into Power Breakfast on CNBC TV 18. Now we have our research team joining in with us to set you up for the trade today. How is the trade set up? What are the important stocks to watch out for? As well as what are we expecting in the world of F&O? So let me start with you, Vivek. Good morning. How is the market setup looking like? Nifty implied open is indicating a very, very flat start as of now.
That's right, Winnie. Good morning. First up, like you mentioned at the start of the show, so many overnight cues of Fed pausing rates, U.S. market ending slightly lower, whole host of companies, especially in the U.S., mega stocks or mega companies that have actually delivered their results. So quite a lot to digest before market opens today. But overall, slightly muted, handover as far as U.S. markets are concerned. Oil prices too slipped yesterday, after the brief respite they saw on Tuesday, once again fell, and Brent now hovering around the $76.50 a barrel mark. Well, Indian markets yesterday enjoyed a very strong session, and the key highlight was the fact that there was a very strong bounce back as far as the broader end of the markets are concerned. Mid-cap and small-cap indices bounced back very sharply yesterday, and that is something that made portfolios feel a lot better. Advanced decline ratio in yesterday's trading session was very, very strong. Now, yesterday you actually saw outsized reactions to good earnings, and that is something that the market will look for even today. So TVS Motors, Syrma, KPIT, CG, Power, Deepak Fertilizer, all of these companies reported earnings either day first day, post-market hours, or yesterday during market hours. All of them saw very strong up moves. The other set of stocks that were in focus was the pharma pack. Remember, pharma pack sold off very sharply. This is after there was a pause as far as funding was concerned. There was also worries about tariffs coming in. After that, there was a very sharp sell-off. But yesterday, the entire pack did very well. A sharp bounce back as far as pharma is concerned. Earnings reaction today. Some of the key stocks include Tata Motors, Bajaj Finance. Key results today. L&T, Steel Cement, whole host of other companies too will be declaring their results. Asian markets, GIFT Nifty, all indicating a very flat start for our markets today.
Okay, Vivek, thank you so much for that. But let's go across now to Hormaz, who's here to tell us which are the important stocks that we should be keeping on our radar. Hormaz, I'm sure there's a long list of earnings that are there in this list.
Morning, Vinny. And if it's not a long list, it's problematic, right, during an earnings season. So, yes, it is indeed a long list. Tata Motors to start off with that. Overall results were a miss on expectations, but the commentary is something that the street might take some heart from, is that they remain, JLR wholesales will improve further in the fourth quarter, and they are on track to achieve the profitability and cash flow targets in FY25, but they remain watchful of the demand situation, particularly in China, and there have been some brokerage downgrades that have come in as well. Bajaj Finance's results saw double-digit growth on the NII and the net profit front. Asset quality was stable, but for the FY26, they expect net profit to grow between 22 to 23%. They expect AUM growth of 25%, and they also see credit costs at 2% in FY26, provided that the fourth quarter credit cost remains between 200 to 205 basis points. And they also said that they are on track to cross 100 million customer franchise by the end of FY25. Now, Blue Star's results were either in line or above expectations on a year-on-year basis as well. Sees healthy growth in revenue and margin expansion as well, so you keep an eye out on that. Raymond's revenues were up 40%. Margins also saw an expansion of close to 300 basis points from last year, so another positive result on the operational front from Raymond. Aarti Drugs said that this API segment faced some pressure this quarter because of lack of demand and reduced market prices as well. However, they said that they remain confident of double-digit revenue growth and 13 to 14% margins in FY26. SRF's results, where the chemical business finally saw some growth after a slew of disappointing quarters, but they said that they are seeing gradual increase in demand for the chemical business, and the fluorochem business also saw support for refrigerants as well. Remember, the stock was higher yesterday after Gujarat Fluorochem said that refrigerant gas prices may increase in the future as well. Restaurant Brands Asia, well, their net loss widened from last year. Margins also narrowed on a year-on-year basis, so keep an eye out on that. JK Paper, the struggle continues there. Net profits are down almost 70%. Margins are down almost 1,000 basis points from last year. It'll be interesting to see what the management has to say on this. And lastly, Sona BLW, where they've signed an MOU with the E-Plane company to develop powertrains for eVTOLs and drones. And lastly, GR Infra, which has emerged as an L1 bidder for a Western Railway project worth 260 crore rupees. Back to you.
Okay, Urmas, thank you so much for all the stocks that we should be keeping on our radar this morning. But on that note, let's go across to Sudarshan, who's here to tell us what's going to be happening in the world of F&O. Good morning, Sudarshan.
Good morning, Vinny. So both domestic and global cues are looking mixed after a strong day of trade that we saw yesterday. We saw mid-cap index closing with gain of more than 2%, while it was a healthy gain for both Sensex and Nifty. For today, GIFT Nifty is indicating a very flat start. Talking about the flows, FIs continue to sell. Yesterday, they sold more than rupees 2,500 crore in the cash market, while DIs have bought nearly rupees 1,800 crore. But in the index future side, in the index option, FIs have bought nearly 21,600 crore, and in the stock futures, they have bought nearly 2,900 crore. Now in the last 6 days, they have bought in stock futures nearly 10,000 crore. But talking about the index futures, they bought yesterday 166 crore, and they have reduced long positions by 6,850 contracts. Also, they have reduced short positions by more than 19,000 contracts. With this, FI's long exposure now stands around 25%, and on the client side, long exposure is around 70%. On the option side, two calls, 23,400 and 23,000 calls were active, and now looks like on the downside for Nifty, it's capped around 23,000. So support is now seen somewhere around 23,000, and resistance is now at 23,350. That is also 20-day moving average. Two stocks that will be in focus. First, KPIT Tech. Earnings were mixed, but guidance, they had raised EBIT margin guidance, and even in the commentary, company has given a very strong commentary, so stock will in focus. Second is Laurus Labs. Previous two sessions before yesterday, stock had seen a big fall, but yesterday you saw that stock moved 7% higher after US government announced that executive order that government announced a few days ago. Now it has paused that executive order. That's the reason we saw a big move in Laurus Labs. So keep an eye on these two stocks.
Okay, thank you so much for that, Sudarshan. But on that note, we're going to slip into a very short break. Up next, we'll get you what's happening in the world of commodities with Manisha Gupta, so don't go anywhere. Welcome back and thanks for staying tuned into Power Breakfast on CNBC TV 18. Now it's time to go across to Manisha Gupta, who's here to tell us what's happening in the world of commodities. Manisha, crude, are we seeing a decline here today? What is the trajectory coming in there?
Well, absolutely. It hasn't been such a great time for the crude oil prices or crude bulls for that matter, because since the U.S. President Trump has come in, he's been talking prices down, so much so that we are now trading at the lowest level in 2025. Also, the U.S. crude inventory is gained more than expected by 3.5 million barrels. Libya also has returned back to its normal exports. Libya, remember, has an ongoing civil war, and there are some disruptions from time to time. But at this point in time, the exports are back to normal. Also, the markets are watching out for the OPEC and allies meeting, which is on 3rd of Feb. As of now, the U.S. president has asked OPEC and allies to increase production and ensure lower prices. OPEC has not responded to that, but Feb 3 could be important in the sense on how OPEC deals with this. So this is what is weighing onto the markets right now. But on the other side, most of the metals also are trading weaker. The U.S. has held its rates steady, has given very little guidance on the future rate cuts as well. So that is what is bothering the street. But we have seen a rate cut come in from Bank of Canada, and there is an expectation that European Central Bank could also lower rates this week. The meeting is on Thursday, that's today. You have seen the gold prices come off its highs. Silver fell 0.5% yesterday. Aluminum prices have continued to decline. Copper is trading at a 3-week lows as well. So as far as metals also go, there is really no direction coming in from the U.S. markets right now. What happens on 1st of Feb in sense of tariffs will tell you on how the future would be. But for the next 2, 3, 4, 5 days, it's going to be perhaps very, very volatile.
Okay, surely volatility is what we're expecting in the next few days at least. But thank you so much for that, Manisha. Now moving on to some national news updates that we have. The stampede that took place at the Mahakumbh festival claims at least 30 lives and leaves over 60 injured. The stampede took place at the Sangam Nose in Uttar Pradesh, Prayagraj, as large crowds thronged the ghats for a holy dip on the occasion of Mauni Amavasya. UP CM Yogi Adityanath has also set up a 3-member commission to run a judicial inquiry into the stampede that took place at the Mahakumbh festival last morning. Congress President Mallikarjun Kharge blamed a VIP movement and half-baked arrangements. Samajwadi Party Chief Akhilesh Yadav urged the state government to help those affected. And the unfortunate incident in Mahakumbh, however, has not deterred devotees from flocking to the region. Given the massive influx in pilgrims, airfare prices have soared, after which the Civil Aviation Minister chaired a meeting to discuss the airfare prices to and from Prayagraj. Government sources tell CNBC TV 18 that airlines have requested to ensure a return ticket from Delhi to Prayagraj does not exceed 24,000 rupees. Airlines have also assured the Ministry of lowering airfares on other routes to Prayagraj. Okay, with that, we are absolutely out of time on this edition of Power Breakfast on CNBC TV 18. Thank you so much for tuning in. Up next, your Basan Morning Call.